Thanks for joining this webinar, Spotlight on Inter-Entity Transactions for Sage 300. My name is Natalie from Orchid Systems, and today I'm joined by Anne from Orchid Systems and Robert Lavery from Robert Lavery & Associates, our distributor in North America. In this Inter-Entity Transactions presentation, we focus on streamlining transaction flows to manage multiple entities with ease. Rob Lavery will go through a scenario to allocate AP invoices across multiple Sage 300 companies and paying those invoices using a bank configured in cash management. Rob will also demonstrate how using document management link with inter-entity facilitates collaboration across entities in Sage 300. Anne will then demonstrate inter-entity working with the Sage 300 web screens. Although you need to configure inter-entity transactions in the classic desktop screens, its automations work when using the Sage web screens. We will then share some tips and answer some common support questions. But first, let's discuss what inter-entity transactions is designed for. Inter-entity transactions is part of our suite of products to help streamline financial processes. Sage 300 offers many advantages for companies running multiple entities, and Orchid products make the management even easier. And this explains why over 1,000 Sage 300 sites use the inter-entity suite. Today, we're focusing on inter-entity transactions to keep entities in balance at all times and generate offsetting loan account entries automatically. Inter-entity provides tight control over transactions spanning multiple entities in Sage 300. It streamlines the processing, eliminates the duplicate data entry. It increases the accuracy of your financial data, and most accountancy staff who implement inter-entity report saving days of effort each month. Inter-entity transactions generates automatically offsetting loan account entries based on configurable rules. It works with all GL subledgers, including banks. Inter-entity trade, which we will cover in a forthcoming webinar, is used when related entities trade products or services with each other, and it creates reciprocal documents automatically. Do you allocate expenses and/or revenue across multiple funds or companies, balance intercompany loan accounts, or process cash between companies? Are you wasting hours or days each month manually reconciling those accounts and creating balancing transactions? What if you could keep those entities in balance at all times, with offsetting entries being automatically generated in each company based on highly configurable rules and with an extensive audit trail? If you're answering yes to any of these questions, then you need to look at inter-entity transactions in your company. So inter-entity transactions facilitates allocations and transfers between related entities. Your entities are defined by GL segments in your chart of account. They can be branches, divisions, departments, funds, projects, trust, companies. It's very well suited to non-profit fund accounting. It works in all GL transactions regardless of origin. Directly in the general ledger, in your subsidiary ledger like your AP, AR transactions, third-party modules, and external systems. You configure your routes, including having complex routes across multiple entities based on your environment. Additionally, you can trigger some additional transactions in GL, AR, and AP in your company to facilitate reallocation. If you're running the multi-database edition, you can also run a consolidated AR and AP age trial balance across multiple databases. You have a report to check that your loan account balance are in balance, and you can also use cash management to facilitate AP payments, receipts, and bank transfers between companies. There are many use cases for inter-entity transactions where head office, manufacturing subsidiary, overseas sales subsidiary, local sales subsidiary have loan accounts between each other, and inter-entity transactions ensures that you don't duplicate the transaction entry. And the best way to see what inter-entity does is in action in Sage 300. So in our scenario, we're allocating AP invoices across multiple Sage 300 databases and paying those invoices using a bank configured in cash management. And for this, I'm going to hand over to Rob Lavery.
Now we want to walk you through the inter-entity transactions module from Orchid. This has got to be my favorite solution from Orchid systems. This is the one solution that I can guarantee will save your clients hours, if not days, by eliminating the need to do manual reconciliation of the due to, due from intercompany loan accounts. As a quick review, let me just highlight a couple of the setup options so you understand the power of what inter-entity transactions is doing for you. To understand that value, you need to recognize that what inter-entity transactions is doing is balancing the debits and credits for your intercompany transactions at an individual segment level. So you need to have at least one of your segments identified as a company or balancing segment, whether you're allocating expenses, allocating revenue, or moving money between companies. And you can do this at a company level within one Sage 300 company database, or you can move these transactions across one or more extra Sage 300 company databases. And so by balancing at an individual segment level, the system will identify transactions that go across companies. And for a nonprofit, it could be funds. It could also be things like product lines, divisions, or departments, depending on the organizational structure that you want to support these transactions in. And once you've defined the segment, you then define the individual segment codes that represent those different entities, whether they be companies, funds, product lines, departments, or divisions. And once you've established that, then you have the ability to process transactions within one Sage 300 company database, or you can allow inter-database processing to facilitate transactions moving from one or more Sage 300 company databases. In addition to the ability to allocate revenue or allocate expenses, I mentioned the ability to manage cash as well. I'm going to be giving you a short example of a bank transfer entry, but just so you know, we can also receive money through AR receipts on behalf of a related company, and also send money or make payments on behalf of a related party. Once we've established the setup options, we would want to link the accounts, which establishes the relationship between the various companies. So as an example, a linked account will set up the loan account, which recognizes the intercompany receivable in company 2, denoted by the -2, which is receivable from company 1. And that should always be in balance with the intercompany payable in company 1, denoted by the -1, which is payable to company 2. So company 2's receivable from company 1 should always equal company 1's payable to company 2. And then we establish a transaction route, which determines how we're moving these transactions between the companies or entities. In the case where there's a direct relationship, then we have a one-step route. So in this case, any transactions moving from company 1 to company 5 will just require a direct relationship, and we're not clearing entries through a subsidiary, parent company, or management company. But in the case where I'm moving transactions between entity 1 and entity 3, you can see how we're able to clear these loan account transactions through a intermediary company. Again, whether that's a parent company or a management company, holding company, depending on the hierarchical structure of the organization that is using Sage 300. So we're moving entries from company 1 to company 2, and then from company 2 to company 3. And you can create as many different levels as you need to in order to facilitate these entries. In the case where the companies or funds are part of a separate Sage 300 company database, then that entity code that we set up can be designated as another online database. We point to the org ID for the company database. We specify a source type for the entries that will be created in the general ledger of that target company. We assign a user ID. Now, typically you wouldn't use the admin user ID. You would want to use something like inter-entity or inter-company or something to denote a specific user with specific rights to be able to create these GL batches in the target companies. And then you can also specify, once that general ledger batch has been created, do I want to leave it open as a batch that can be reviewed and edited prior to posting? Or would I like to auto-post that transaction batch automatically once it hits the target company? Now, in the example where the database that I want to send these transactions to is not online, then the system allows me to create an export file that I can then email or send over to that external company database, and they can use that file attachment to import the transactions into the offline general ledger company database. So whether we're connected on the same network or not, we can still manage intercompany transactions with related party companies. So let's go through the example of accounts payable to highlight how we can not only create an expense allocation entry within a company, but using document management link, we're able to share that same document, in this case an AP invoice, with the related party company that's receiving a portion of the expense that we're going to be paying on their behalf by recording the AP invoice within our company. So to do that, I want to highlight a couple of the other features within Sage 300 and inter-entity. So let's do an allocation of office supplies. And I'll record that transaction like a standard AP invoice entry. And this is one of the other beauties of the inter-entity transactions module. Once you configure the application, inter-entity does its work in the background. We're not really changing the way your clients are entering their AP invoice transactions. We're using the same AP invoice entry screen. The only difference, and you'll see this in just a moment, is that we're going to record the transaction and do the expense allocation on the original entry of the AP invoice. Now you also notice that as I entered the vendor number, immediately document management link springs into action, showing me all of the invoices that we've recorded against vendor 1200. And then as soon as I enter the invoice number, let's say 651, it gives me a separate window within document management link to have the specific invoice for this transaction. So not only can I show all invoices for that vendor, but now I have the option to create the invoice for this specific entry. I can explore and see all the transactions stored in the folder against that vendor. So again, I'm also using network folders, but when I've got a new invoice that I want to add, by clicking or dragging that document into the window, it immediately renames the document to match the document number I've entered in this field. Okay? So it's a very powerful tool to be able to support transaction documents in the system. Okay, so it looks like I need to add an additional record here. So I will add this again. Now you notice that it's called approved emergency form, but it renames it, as Nancy showed, to the information that we've stored within that document number field. So what I want to do is also then show you the power of using inter-entity with the distribution set capabilities of Sage 300 accounts payable. Let's say that my invoice total is $2,000, but I want to allocate this across two companies. So I can have an intercompany distribution set that's already set up, and I'm going to use the two-company distribution set. So if you're not familiar with this functionality, Very briefly, under the AP setup, you have distribution codes where I can use an alphanumeric description to allocate expenses to a GL account. But distribution sets takes that one step further by allowing you to define in advance across multiple GL accounts a distribution percentage, spread evenly, a manual allocation, or a fixed amount. So in the case where you're doing intercompany transactions and having to allocate these transactions across multiple accounts and even multiple companies, taking advantage of the distribution sets is a very handy tool. It allows you to predefine the percent allocation, whether you're going to be allocating 100% of the invoice or not. And when I click the Create Distribution button, you notice how it populates those line details for me automatically. And in this case, because I'm using inter-entity, I've set up the accounts with the -1, -2 to denote the different entities that I want to allocate this expense to. So in this case, I'm not using the purchase of inventory, so I'll delete that line. Now, for those of you that belong to jurisdictions with value-added taxes, you notice that the tax amount's been allocated as well. In some cases, you might not want to allocate the tax because of the input tax credit that companies can accrue when they record AP invoices and they're paying those expenses on behalf of related parties. So what you might want to do in those cases is remove the tax that's been allocated to the other entity and set up the tax to be 100% recorded in the company that's recording the AP invoice. Now, in my case, I'm actually going to eliminate the tax entirely on this transaction in order to keep the expense allocation simple. But this is all it takes to set up the AP invoice. I allocate between the two companies $1,200 to company 1, $800 to company 2, which gives me my total of $2,000. I add this as a transaction, and it's now going to be recorded and posted up to my general ledger. An invoice 6517 that's been attached here in accounts payable, you'll now see the power of Document Management Link storing that document outside of Sage 300, so that all I need to do is store it once, but now I'll be able to reference that same document from multiple screens, not only within this Sage 300 company, but also the related party company database. So I post my AP invoice up to my general ledger, and I now have a GL batch that's been created within what we call the source company. So by opening my batch list, I'll see the amount of $2,000 coming up from AP. When I open the batch, I'll see the recording of the transaction to the AP trade account. And you notice that the invoice that I set up against my AP invoice transaction in the AP subledger is also represented here as a document attachment against my GL batch. The integration settings allow us to create a reference to the vendor number, as well as the description of the invoice or document details. Those integration settings are part of inter-entity transactions and allow us to add to the audit trail information that's recorded with the transaction. And you'll see how the reference and description can also be passed over to the target company when we move the transaction from entity 1 to entity 2. Now, the other thing that I want to highlight here is the source type. You notice that this is AP invoice source type, and I have a balanced entry of $2,000 worth of credits against $2,000 worth of debits. However, the issue for us is that because inter-entity is installed, it's going to identify the fact that instead of having just a balanced entry, it's actually balancing at the individual segment level. So it sees the transaction slightly differently. It sees a source credit of $2,000 being posted to the Company 1 AP Trade Control account, and then a debit of $1,200 being recorded to Company 1's office supplies expense account. Because interentity is balancing at the individual segment, it's identified the fact that we're actually out of balance by a debit of $800. So what interentity is going to do is it's going to add a line to this batch and record an $800 debit, which is going to be recorded into a Company 1 account, intercompany loan account receivable that's due from Company 2, and it will identify the transaction line with an IY source type. So the message here is that you now no longer manually enter transactions into the loan accounts. You let interentity transactions automatically set up the loan accounts to balance the entries at the company or segment level. And that way, you never have to manually reconcile the due to, due froms anymore. Because once you have those loan accounts in balance, interentity transactions by definition will be balancing those loan accounts, debits and credits across companies or across departments automatically every time you post a transaction that has intercompany implications. So likewise, when it looks at this third line in the GL batch, I have an $800 debit in Company 2 with no offsetting credit. So again, interentity will add a line for an $800 credit to a Company 2 account, which is the intercompany payable that's due from Company 1 in Company 2's books, and that will also have the IY source type associated with it. So you'll always be able to see the lines in a batch that interentity transactions has created for you. So this is what we like to call the accounting magic, where the system automatically identifies transactions that need to be balanced through the loan accounts, adds those lines to the transaction batch, and then because Company 2 is a separate company database, it's going to take the office supplies expense for Company 2 of $800 and the intercompany payable that's due from Company 1 in Company 2's books of $800 and set up those entries within Company 2's general ledger for us automatically. And then because we have document management link configured here in the source company, but also in the target company, a copy of the invoice from the original AP invoice entry will be sent over to Company 2's database as well. So if that doesn't get accountants excited, I don't know what will. Now, you know what they say about accountants, that accountants are not boring people. They just get excited about boring things. But this is definitely not a boring thing. This makes accounting fun and, if you will, quite magical. So what I want to do now is I want to post this entry into my general ledger of the source company, Company 1 or Orc Limited. And as I post the entry, you'll see some additional lines of transaction detail will be added. So it balances the entries through the interentity processing. It exports the expense line required over to Company 2's database. And then you see the additional lines of entry that have been recorded to the loan accounts here in Company 1. So I mentioned that we have a different source type. The IY source type is now recorded as part of the transaction. So if I expand the window and we move across again to show you the accounts and the source types, I'll just review this one more time before we show you the effects of the entry in Company 2. So we started off with our original AP invoice transaction from the AP subledger, crediting AP trade $2,000, a debit of $1,200 to office supplies expense in Company 1, and then you see the entry recorded in Company 1's books, which is the intercompany receivable due from Company 2 of $800. And there's my balanced entry within Company 1, and the loan account entry designated with an IY source type. And likewise, the office supplies expense for Company 2 has been set up and balanced against a loan account entry in Company 2, which is a payable due to Company 1 in Company 2's books, and that also has the IY source type. So there's your accounting magic. Now, it's fair to say that the expense account 7900-2 is an account that's been set up within Company 1's GL chart of accounts. And that's because we need that expense account set up in order to create the intercompany transaction balancing entries that InterEntity generates through those loan accounts. Now, there is another way to do that, what we call GL entity substitution, where I can use an optional field, or what we've done here using Extender, we've actually added the entity optional field as a separate column in the grid. And what I could have done instead is I could have designated that expense to go to entity 2 rather than set up a separate account for each of the expenses that I want to allocate to company 2. So that is another option for clients that don't want their chart of accounts to get too large. You can actually use entity substitution, which is what we call a GL trigger, and that GL trigger can be set up here where any of my 6,000 expense accounts could be allocated to different target entities, and you just need to set up one to manage multiple entities, and it would automatically clear through an inter-entity clearing account to balance the entry, and then when it arrives in the target account database, it would reverse out the clearing account and allocate it to the real expense account that we used. So it is possible to use GL entity substitution as a way to avoid creating a bunch of different expense accounts in the source company for all of the other companies it wants to allocate expenses to. But now the magic. This is where we pull the rabbit out of the hat and we show you the effect of inter-entity transactions moving a loan account entry with the related expense over to the GL in the target company. So this is the transaction batch that we created off our office supplies expense transaction in Company 1. And in Company 2, you can see the reference to the vendor number, the description for the vendor's document, and voila, document management link is showing you the supporting document for that invoice against this GL transaction batch, which validates the expense allocation that Company 2 has received of $800 off this $2,000 invoice originally set up in Company 1. And there's the loan account entry, so we have a balanced transaction in the GL for that loan account entry. Now, because we also have a trigger to do what we call AR reallocations, what we could have done is when we posted the GL transaction in Company 1, instead of sending over an intercompany expense allocation to the general ledger in the target company, we could have actually created an AR invoice rather than set up an intercompany receivable in the loan account in the GL. And then using inter-entity trade, that AR invoice in Company 1 would have created an AP invoice in Company 2. So it is possible to allocate expenses and create subledger entries through what we call reallocation entries in inter-entity transactions. And we could still use Document Management Link to show the supporting documents on those entries. They would just be recorded now against AR and AP invoice entries rather than in the GL against loan account entries. So that's how we manage expense allocations using inter-entity transactions and Document Management Link to move supporting documents between the company databases. Now, to finish off the presentation today, I'd like to complete the loop on how we would manage those loan accounts. Typically, where you're not generating AR and AP invoices across intercompany, you have loan account balances that need to be reconciled and then eventually cleared. So inter-entity transactions does come with a loan account balance inquiry. And this supports multiple currencies if these related party company GLs are in different currencies. But what this does is it identifies for you the fact that all of my loan accounts will be in balance when the source debits on one side equal the source credits on the other side. So as long as I'm not seeing any discrepancies here, I know that I'm completely in balance across all of my companies. But that doesn't mean that there isn't an actual balance outstanding. And so what companies typically do is they do a bank transfer to move funds from one company to another to clear out an outstanding intercompany loan payable, or in the case where they just want to move funds between companies. So let's say I want to do a bank transfer from, I'm going to use Orc Ltd, which is the company I'm in now, and set that up to Orc Inc. IN2. And this is also going to highlight the multi-currency functionality that's supported, because inter-entity transactions is not changing the way Sage 300 processes entries. It's just automating the process for you. Now here, where we want to do a bank transfer entry, we're taking the money from the bank here in Orc Limited, and we want to send it over to the bank within Entity 2. But what this account is actually a bank clearing account that we set up in Company 1. And then what we do as part of the setup within inter-entity transactions is we map the clearing account in Company 1 that represents the real bank account in Company 2. So by mapping the clearing account to the actual bank account in Company 2, the system knows how to set up the transaction properly in both companies. Now, the other benefit of doing it this way is that as I enter the transaction, so let's clear out the $800 payable, let's say, it will convert to the equivalent in the currency of the GL that we're depositing the money to. And all I need to do is post. And by posting the entry, because we're doing this in bank services, it's going to create a withdrawal entry as we move the money from Company 1 and do a deposit entry in bank services of Company 2, which means that these entries will automatically appear on the bank rec in each company's. And because we can auto post the transactions, the bank entries get posted up to the GL automatically if you choose to configure the system that way. So now within bank services, I have a bank transaction, which was the bank transfer is now recorded as a bank entry here in the source company, Company 1. And because we were moving money from this company, I see the entry posted in the US dollar equivalent and the $800 Canadian equivalent. And I'm doing a withdrawal, which is a credit into the bank account of Orc Limited, offset by the loan account entry, a debit to the loan account. So credit the bank account for withdrawal and debit the loan account to draw down the outstanding payable. That's how we manage the entry within Company 1. And now when we move over to Company 2, we'll see that a bank entry has been created and automatically posted up to the general ledger. So let's just go to the general ledger. We see the bank entry that's been recorded, and this will show you that the money has been properly deposited. And again, if I had specific transaction fields that I wanted to attach, as I enter the bank entry in Company 1, I could have supporting documentation if there was any document that I wanted to record. But again, notice the reference is giving us the description from the original bank transfer entry. And we've set up the debit to their bank account to acknowledge the money that was transferred to them, and the loan account entry to balance that. And then if I drill from GL back into bank services, there's my deposit entry within bank services, acknowledging the debit to the bank and the credit to the loan account entry. And again, you see documents that could be popping here in Company 2 against the original bank transfer entry. So there you go. Inter-entity transactions, a wonderful tool to help your clients keep their loan accounts in balance, to avoid manually reconciling the due to and due from entries, and being able to allocate expenses, allocate revenue, and move money between companies right through bank services automatically with no rekeying, no importing, exporting, to eliminate key errors and having to generate transactions manually in 2 or more companies for the same entry. We hope that you've enjoyed this presentation on inter-entity transactions.
And just as Rob used accounts payable and inter-entity transactions to record expenses to be distributed amongst multiple companies, we can use accounts receivable and inter-entity transactions to record receivables against multiple companies. And I'm using the Sage 300 web screens. We are going to create a new batch. For our customer 42350, the Manly Sea Eagles Cafe, and we're going to record the rent, a portion of which is for Entity 1 and a portion of which is for Entity 2. This is a summary invoice, and using the distribution codes Rent 1 and Rent 2 for the correct general ledger accounts, we're going to record $1,200 for Entity 1 and $800 for Entity 2. And go ahead and post that batch. And in the general ledger, if we open up this batch, we can see the debit to the accounts receivable control, credit to Company 1's rent received, and credit to Company 2's rent received. And just like in the accounts payable example, when you post a general ledger batch, because inter-entity transactions works at the GL level, it will automatically balance the entities using the configured loan accounts. So we have the credit of $800 to Entity 1's books, debit to Entity 2's books to balance the loan account entries in Company 1, and then transferring these two amounts to Company 2. And connecting through to Company 2, in the GL transactions, we have the general ledger batch that has been sent by Company 1, which could have been auto-posted, and we have got the credit to the rent revenue account and the debit to the loan account with Company 1.
Thanks, Rob and Anne. And we've seen how we can use inter-entity transactions to allocate expenses across multiple entities, create the loan account entries automatically, view the supporting documents in multiple entities without having to re-enter them, and pay across multiple entities. In our second example, using the Sage 300 web screens, we've seen how we can allocate rent received in one entity on behalf of other entities. There are many use cases across a range of industries. For example, regional government in Canada, a media group in the Caribbean, resort in South Africa, managing complex unit owner structure, a non-profit research institute, an accounting company in Australia, non-for-profit representative association, and there are some case study examples on the Orchid website. The benefits overall were a reduction in manual entry, which means time saved and fewer errors. So you can consolidate your payment in one company and allocate the costs in each subsidiary automatically, which means faster month-end reporting and you can balance your fund allocations among partners' accounts more efficiently. Some other examples are in the financial sector, where one of the inter-entity customers is a financial trading firm headquartered in New York, employing over 800 people in offices around the world, and they utilize inter-entity transactions and inter-entity trade to manage transactions between 29 related entities. They automate transactions such as raising and settling inter-entity charges, covering transfer pricing, markups, and SLA agreements, recording of funding of entities for trading purposes, the recording of capital movements between entities, settlements of liabilities on behalf of related entities. Another example is a consumer packaged goods company that uses inter-entity transactions and trade for its 9 entities to help them transfer inventory between each other, automatically record the funding between entities, pay expenses on behalf of other entities, receive monies on behalf of other entity, manage intergroup promissory notes, whilst keeping intercompany loan accounts in balance at all times. So in the final part of this presentation, we're going to look at some tips and some common support questions. And for this, we will refer to the inter-entity frequently asked questions in the inter-entity help. We've got a few points there, and let's start with using source types in inter-entity transactions. Source types are very useful to monitor and identify the transactions created by inter-entity transactions. You configure the source types in inter-entity options on the processing tabs here. You have to use source types that are not used for other transactions, and you can't use source types that are reserved by some Sage process, particularly the intercompany module from Sage, and that is documented in the help and in the knowledge base. In the target company, you configure your source types here under entity database mappings. So in this example, we're using IE as the source types of transactions created in the other databases, and you need to make sure that the source type actually exists in the GL in the other company. One of the beauty of inter-entity transactions is that generally once it's set up, it all works in the background. However, to confirm that everything is working fine, you have some inquiries that you need to come and monitor to make sure that your transactions have been created correctly. And you do that here in the IET audit inquiry. You can filter by status. So you can filter using Control F. So if I want to see if anything is not exported, I actually have 2 transactions in error here. And if I look at the error message, it's telling me what is going on, unable to open Zappy because I have a bad password. So what can happen is you change the password, but you don't go and change it in the entity database mapping. So you get the error here. So you'd go into database mappings, change the password, and go then into IET periodic processing. In IET periodic processing, you can reprocess the transactions that are in error. A reminder that in the most recent product update, so it's been probably about 2 years, you need to be part of a special security group to be able to process exported entries, rebuild audit entries, and clear exported audit entries. There are a few videos available on the Orchid website on how to process, on what all the different errors that you can see in the audit logs mean and how to reprocess them. The process is the same for GL triggers and cash management. Check in the inquiry logs, GL trigger audit inquiry or cash management audit inquiry, find out what the error is, fix the underlying error, and go to periodic processing to reprocess. You use the IET account balance inquiry or the IET account balance report to check if the due to, due from loan accounts between the entity pairs are in balance. You select the period and the currency, and the balances for the linked loan accounts as defined in IET linked accounts will be displayed. The balances are dynamically read from the relevant company databases defined in entity database mappings. The IET account balances report displays the same information. If any of the linked account pairs are not equal, it's most likely because there are open batches in one or more of the companies that need posting. Finally, a common support question is how to run the inter-entity consolidated age trial balance, either AR or AP. And again, this is a special report that comes with inter-entity that will look at all the databases that you have configured in entity database mappings and create a new version of the report that includes all the transactions from the different companies, including the database ID. Okay, to run the inter-entity transactions consolidated trial balance, go into inter-entity, processing reports, and you have here the AR age trial balance and the AP age trial balance. And they both work in a similar manner. So if we run the AR age trial balance, inter-entity is going to run the aging for all the companies that are configured in inter-entity database setup. So here we've got Orc IN2, Orc IN3, and if I keep going, Orc IN4 and Orc LTD. So it is a custom report that goes across the databases, but to run it, you need to put it in your AR 70A for version 2023 ENG directory, or the AP trial balance goes into the AP 70A ENG folder. So because of this, we suggest that you use Sage customization directories for all the companies that have inter-entity activated. So here I've configured those 4 databases which are set in inter-entity database setup to use these custom directories. And if I look at my custom directories, I've got an AP 70A folder with these 2 reports, and my AR 70A folder with the AR TBAL01 and AR TBAL SY reports, and they have been copied into those customization directories from the IY ENG folder. So these are the 2 AP reports, and these are the 2 AR reports. Set up the custom directories, copy the reports in there, and the reports and you'll get your trial balance across databases. And that is available with inter-entity transactions multi-edition. It is documented in here how to run the AP trial balance and how to run the AR one. So I'll encourage you to look at some of the training videos available on the Orchid website, as well as inter-entity help for more tips on using and configuring inter-entity transactions. As we've seen in the presentations, inter-entity transactions is commonly used in conjunction with other Orchid modules. Inter-entity trade, which lets you create reciprocal documents between transactions that trade products and services with each other, can be used in conjunction with inter-entity, in particular with GL triggers reallocation to create AP and AR transactions across databases. And we will cover that in the next presentation on inter-entity trade. Rob has alluded to adding the optional field to configure the to select the entity that you want to allocate a transaction to using optional field, configuring inter-entity transactions with GL triggers and entity substitution. Again, we have demonstrated this on several examples, and you can refer to the Extender Marketplace on the Orchid website for details on this particular Extender app. We've seen how document management link can be configured so that you can view your documents across multiple entities, and there is a detailed presentation for that, again, in the video section of the Orchid website if you want to see how to actually configure DML for this purpose. Thank you for your time, and be sure to look at the resources on the Orchid website for more information. We're now open for Q&A.